Shri Gurubhyo Namaha. Welcome to our online teaching academy, Ekaleva. Cbse, Class 12, Economics. Chapter Balance of Payments, Part 2. This chapter covers the meaning of balance of payment, the structure of balance of payment, and the components of current account and capital account. Definition of balance of payment. Balance of payment is BOP. Balance of payment is an accounting statement that provides a systematic record of all the economic transactions between resident of a country and the rest of the world in a given period of time. Then what is BOP? Balance of payment is an accounting statement. It's an accounting statement, like how an account is maintained. Same way, the government also maintains this statement, and this is a systematic record of all the economic transactions. Economic transactions are the transactions which involve the transfer of title or ownership of goods, services, and other assets between the resident of a country and the rest of the world. That is row, rest of the world, other countries, in a given period of time. In a given period of time, 1 year. Structure of balance of payment. Now, to know the structure of balance of payment, we know it is a double entry system with the credit side and debit side. The credit side records all the inflows. It means the foreign exchange that comes to our own country or the sources of foreign exchange. And the debit side records all outflows. It means what we have to pay for other country, and it is otherwise called as the uses of foreign exchange. Now, as how an account is maintained, same way we have the debit side and credit side. In the credit side, we have all the inflows or the sources, and in the debit side, we have the entry of outflows or the uses. All the positive items are recorded in the credit side, and all the negative items are recorded in the debit side. BOP account has two types of account. It comprises of two types of account. One is the current account and the other one is the capital account. Current account refers to an account which records all the transactions relating to export and import of goods and services, unilateral transfers during a given period of time. Export and import of goods and services. Export and import of goods, we call it as visibles, and the services we call as invisibles. Even unilateral transfers come under invisibles. So these are the items that are recorded in the current account of BOP. The components of current account of BOP. There are two components, two main components, visibles and invisibles. Visibles are otherwise called as merchandise. Visibles are the goods. It means the tangible goods, that which we can see, you can touch, So it means all the physical goods comes under visibles, whereas invisibles are intangible. They are the services, factor services, non-factor services, and current transfers. Now under visibles we have export of goods and import of goods. It means this comes under trade. Let us go into detail the visibles and invisibles of current account of BOP. Visibles. Visibles are the goods. We import goods. Sometimes we export goods. At times exports might be more than the imports, or at times imports might be greater than exports. Goods are either imported or exported. A major part of transactions in foreign trade is in the form of export and import of goods. These include all types of physical goods. The movement of such items is open and can be verified with custom officials. So all physical goods come under visibles. Now, which visibles to be recorded in the credit side and which should be debited? When we export goods, take for example, we export TV, television. Now, when we export television to other countries, what is that we receive in return? We receive income. It means we receive the foreign exchange, the foreign currency we receive. When we receive foreign currency, it means it is an inflow to the economy. All inflows should be credited. So as the payment is made in terms of our currency, there is a flow of currency from other country, and so we credit it. At the same time, when we import goods, take for example, we import cell phones from America. Then we need to pay them the dollars. American dollar has to be paid to America. Then in such case, there is outflow of money. When there is outflow of currency, then it should be debited in the BOP account. Invisibles are those items which are intangible. They are the services rendered to or from abroad. Now let us take services. This includes large variety of non-factor services sold and purchased by the residents of our country to and from the rest of the world. So services like shipping, banking, insurance, all come under invisibles. So when we record these items, when the services are rendered by India, that is our country, to rest of the world, to abroad, then when we render service, we get income payments. It means there is inflow, and inflow should be credited. It comes under the positive side. Whereas the opposite happens when the people in abroad serve for our country. Take for example, the banking service, or the shipping service rendered by the foreign country to our own country, in such case, we have to pay them in terms of foreign currency. When we make payments, then it should be debited, as there is outflow of currency. The next component that comes under the invisibles is transfers. Transfers are unilateral transfers that include gifts, donations, cash remittances by families, etc. These refer to those receipts and payments which take place without any service in return. That is why we say transfers as one-sided transactions. Now, these transfers are in the form of gifts, donations, remittance by families, and even scholarship. All this comes under transfers. When we donate to other countries, then there is cash outflow, or the payment is made in terms of their currency to that particular country. Then this is debited. Whereas when we receive a gift check, or there is cash remittance by families who have settled in abroad, and we receive money, then there is cash inflow. Hence, it is credited. It comes under the positive side of BOP. Income includes investment income in the form of interest, rent, and profit, and compensation of employees, which includes wages and salaries. Apart from this, social security measures come under compensation of employees. So, income is equal to investment income. It means the income received from investment. It can be in the form of rent, interest, and profit, even dividend, plus compensation of employees in the form of wages and salaries in cash, in kind, and other social security measures. How is the investment income and compensation of employees treated in the BOP account? The earnings received from profit remitted by branches of Indian companies functioning abroad, interest received, dividends received, etc., are recorded on the credit side as there is inflow of currency. At the same time, the debit covers earnings paid to non-residents, like profits remitted by Indian branches of foreign companies, interest paid, dividend paid, etc., as there is outflow of currency. Compensation of employees. Wages and salaries received by residents from non-residents is recorded on the credit side, whereas the debit includes wages and salaries paid by residents to non-residents. Here, outflow of currency. And when wages and salaries is received by the residents from the non-residents, there is inflow of currency. And so it is on the credit side. So in the previous slide, we saw the components of current account. where you learnt about visibles and invisibles. Now let us know the components of capital account of BOP. The capital account of BOP comprises of borrowing and lending, then foreign investment, and change in foreign exchange reserve. Let us discuss about this in detail. Lending and borrowing is one of the important components of capital account of BOP. All transactions relating to borrowings from abroad by private individuals, institutions, government, etc., and the loan repayments by foreigners are recorded on the credit side. It means the positive side. Why it is in the credit side? As they bring in foreign exchange. All transactions relating to borrowings from abroad. From abroad, the foreign exchange flows into our country. From abroad, the private individuals, the institutions, and the government, they borrow money. When they borrow money, there is inflow of currency. As there is inflow of currency, we record it in the credit side. Similarly, the loan repayments. It means the foreign country would have borrowed from our country, and when they pay back the loan, we call that as loan repayments. Then there is cash inflow, and that is why it is recorded on the credit side. Now let us know about the debit side. Debits comprise lending to abroad. It means we help the other country. The currency goes out of the country, and this is done by the private individuals, institutions, and even the government. Similarly, when there is repayment of foreign loans, it means when India has borrowed money from other country, and when India repays the money, then that is called as repayment of foreign loans, and cash flows out of the country. And that is why it is recorded on the debit side of the capital account. Foreign investment includes two types of investments: FDI, that is foreign direct investment, and the other one is portfolio investment. Portfolio investment includes FII. It means foreign institutional investment. FDI refers to purchase of an asset that gives direct control to the purchaser over the asset. For example, when he purchases a land, or when he starts a business in a country, when he purchases a building, all that increases his asset and he has direct control. Then we call that as foreign direct investment. Portfolio investment is the investment by rest of the world in shares and bonds. When we invest in terms of shares and bonds of the domestic companies, then we call this as portfolio investment. It means there is no direct control over the asset. When India makes investments in abroad, there is cash outflow. Hence, investments abroad is recorded on the debit side. And when foreign countries make investments in India, when foreign countries invest in India, then there is cash inflow. Hence, it is recorded on the credit side. Investments to and from abroad. When investments are made by the rest of the world in shares of Indian companies, real estate in India, then it is recorded on the credit side as there is inflow of foreign exchange. Whereas when investments are made by Indian residents in shares of foreign companies or real estate, etc., then it is recorded on the debit side as the Indian resident makes investments in other countries. There is outflow of currency. The last component of the capital account of BOP is the change in foreign exchange reserves. The foreign exchange reserves are the financial assets of the government held in the central bank. A change in reserves serves as the financing item in India's BOP. When the balance of payment does not balance, it means when there is surplus or deficit in BOP, then RBI either withdraws or adds these reserves. Let us see when it withdraws and when there is an addition. Any withdrawal from the reserves is recorded on the credit side, and any addition to these reserves is recorded on the debit side. So any withdrawal from the reserves adds to the credit side of the BOP, and any addition to these reserves is recorded on the debit side. To receive our online lessons, please press the subscribe button and you will receive the latest updates. Thank you.